You go buy a car, you finance your car. You go buy a home, you get a 30-year mortgage and pay 86% of it in interest. You go to your living expenses and you pay everything on your credit cards, and you have a little bit left over to save at the end of the time. And all of this money, everything you spend, everything you earn is all taxed. Right? So first thing you do is you pay Uncle Sam because you don't know how to write off taxes and create a business. Next thing you do is pay the bank. And then so now you have these two groups of people colluding together. This is a good picture too, I've never drawn before. You have the banks and the government makes money by taxing you. The banks make money on interest, and they both print money at the Fed and make money on inflation. Inflation is not the increase of cost of goods sold. It's not the watermelon at the supermarket going up. That's what they tell us inflation is. Inflation is the increase in the money supply. So when they print money, which they do at an ever-increasing rate, it increases inflation. When they increase inflation, the interest and the taxes that the banks and the government get increase, and we lose more money. Our purchasing power goes down. Median income over the last 40 years has basically been the same. I mean, there's no difference between making $55,000 and $70,000 and $69,000 a year, but the college tuition's gone from $30 to $150. A home price has gone from $100 to $500. A gallon of gas has gone from $1 to $4. All these things have increased significantly. During the pandemic, 80% of all of the money circulating in the economy was printed from 2020 and on. COVID was nothing more than a smokescreen for them to reduce the reserve requirements of the Federal Reserve and the banking system so they can print $18 trillion and decrease the value of a dollar so that the global elites can get wealthier. The debt has increased significantly from 20 trillion to 30 trillion to now it's 36 trillion. $27 billion a week is what we go into debt. And you're worried about spending $12 at the supermarket, right? That's why money's all a myth. Price is a myth. Money is a myth. Money doesn't mean anything. And you go out there and you turn on CNBC and you listen to these stupid guys that make no money. They're media anchors. And you're trying to learn money from watching Money Smart Moves, and this guy doesn't have any money. You go listen to Dave Ramsey to try to go into debt, and all I have in my wallet is credit cards. And I have a little bit of cash because I'm going to Bora Bora and I'm going to tip people in cash, right? This is really what's going on. What's really going on is this is what the market looks like. What's really going on is that everything looks like a roller coaster right now. Everything, financially speaking, looks like this. And if you're like, oh, wow, why wouldn't I want it to look like this? Because it always does this. If you've been on a roller coaster before, as soon as it looks beautiful and you get all the way to the tippy top, next thing you know, bam. All right, and so this is coming. Right? Robert Kiyosaki talks about it in The Rich Dad Prophecy. Ray Dalio talks about it in The Changing World Order. It's not coming from Josh Waxman. These guys are billionaires. Right? I don't really care. I don't have a vested interest in any of this stuff. I just have an interest, period. Right? And I like to understand money. I don't want to be oblivious to what's going on in the world. Right? How does banking work? This is how banking works. You got the banks and the government working together to create the Federal Reserve and increase inflation by printing more money so they can both make more money. The government doesn't print money. Banks don't print money. Banks don't make money except for interest. And the government doesn't make any money except for taxes. And they both make more money when more money is printed. And so when you understand the game, you realize that you put your money in prison and then go to someone else's bank every time you need more money. And if you've been handing over your money to somebody else, you're probably not in the best situation right now. What we do here, and what my niche is, and what we do better than anybody else in the country is this. This is the infinite banking concept. Now, I did not grow up wanting to do this. I never thought I would do this. This is not my intention in the world was, but it was what God called me to do so I can bring this value to you so you can understand how to take all of this BS and put it back into your pocket. How you can take this control that they're putting on you and regain control. This guy, Nelson Nash right here, he is the founder and the father of the infinite banking concept. And he talks a lot about a headwind, and I'm going to explain this concept to you because this is what we've been talking about tonight, right? What we've been talking about tonight is how, and this is what Nelson Nash talks about, is that if you're in an airplane and the headwind, right, you got all this wind and it's blowing at you at 350 miles per hour, and you are going into it at 100 miles per hour, you are still going backwards 250 miles per hour. And so even if you're getting this in speed, you're losing every single time. Why does he use these numbers? He uses these numbers because the average person says that the stock market returns is going to be about 10%. And the interest out of every dollar, 35 cents of every dollar in America goes to interest. So even though you get 10% return on your money, you are still losing because the headwind is pushing you down. The printing of the money, the banks and the government are pushing you down. It is a loser's game. It is a loser's game. You are playing basketball in quicksand. You are running down the football field and it's quicksand. You are, I'm imagining in my mind, like, you know, there's movies where like there's like an earthquake or like the lava, and like somebody's trying to run and like the whole everything's breaking behind them. That's what you're trying to do in the world, in business. Is like everything is crumbling behind you and you just got to keep going and going and going. And if you stop for a second, you're going to fall into the middle of the earthquake or into the lava and you're going to die. And so you cannot stop, right? You can't stop every single day. This has been my message, I've been reading and listening to the book Be Obsessed or Be Average by Grant Cardone, and it's the first time in my life that I feel, since I was little, probably since before I was 13, that I have permission to be obsessed with being successful. And I haven't given myself permission. Like, you may have seen me, you've been like following me for the last 10 years, or maybe we went to high school together, or you know me for the last couple of years or whatever. And like, that guy Josh works hard. Like, you have no clue. There is a whole nother level to me that's coming out in 2025. And so this whole process, this whole understanding is that you are losing every single time. And so the whole infinite banking concept says, hey, forget about this headwind, right? Forget about the headwind. And let me just for another second, who cares? Even if you get 20% return on your money, you're still losing because you don't control anything. You don't control anything, and you're on the wrong side of Mr. Interest. So who cares about this process? Even if you get a 5% return, even if you get a 5% return, because it doesn't matter about the rates of return. I know that sounds like a mixed concept. It's the opposite. Well, you have been sold the wrong services for years. Everything that you've been sold is a lie to help the bankers, the government, and Wall Street, which Wall Street runs this system, and vice versa. The banks run Wall Street, the government's behind Wall Street. That's why there's the SEC. The SEC is a government institution, the Securities and Exchange Commission. They control everything that's going on. The government and the banks control everything going on. And so the whole process of internet banking says, hey, it doesn't really matter 5 miles per hour. It doesn't matter if you're flying slower. If you can take the headwind and push it behind you, and now you have all this wind blowing on the airplane, pushing it forward. Now you can control the airplane. Now it doesn't matter how fast you're flying because you'll be pushed by the wind. So you just got to turn all of the interest on itself and push it into your system. And the airplane is your financial system. The airplane is your pocket. The airplane is your business. The airplane is how you manage your money. And the wind is interest. And most of us have interest blowing towards us, pushing us down. And that's why we have all those problems. The reason that we have all those problems is because the wind is pushing us down. The reason that we have inflation, the reason that we have high cost of goods, the reason that they're printing money, the reason that we live paycheck to paycheck, the reason you think there's a shortage of money is because money's been piled on top of you and you can't even see shit. Right? And you think that there's no money just because you haven't been able to get out from it. And if you would just get out from under this pile of money that's sucking you down and bringing you down, then you would see that there's money all over the place. It's not reserved for the wealthy. People become wealthy by understanding how to collect money. And so the infinite banking concept teaches you to recapture the interest that you're paying to all of these outside banks and financiers and institutions, like the government, even for all the major things that you need in a lifetime, and start putting all that money into your pocket. Start flowing the money. Start putting the wind back into your pocket. The objective is to keep the money in your family, not the Rothschilds family, not the Morgans family, not the Rockefeller's family, not anyone else's family but your family, and to control this whole process. And so, in order to do that, you can use a variety of different things. People ask me all the time, can't you do this with the real estate? Yes. Can't you do this with crypto? Yes. You can do it with any asset. The difference between a cash value life insurance policy and every other asset, though, is that it's guaranteed to never lose money. Warren Buffett's rule: never lose money. You're never going to wake up one day and see your life insurance cash value account drop. You're not going to turn on the news and it's going to say, warning, the life insurance market has crashed. You're never going to see that. You're going to see that with Bitcoin. You're going to see it go up too, but you're going to see it go down. You're going to see the stock market go up, but you're going to see it go down. All of these things, again, the rule is don't never lose your money. So if you're going to lose your money, then don't listen to me. If you don't care about losing your money and you want to play the game of risk, then get off the webinar. All right, this is not the webinar for you. I'm not talking about that. I'm talking about building long range. Talking about thinking long range. Number 1 and 5 are my favorite. Think long range and rethink your thinking, because most likely you're thinking short range, so you got to rethink your thinking. These are Nelson Nash's golden rules. But this is the process, and I just want to get right into it. And the first step is to get a cash value life insurance policy. Can you use this with a home equity line of credit? Yes, but you're going to owe the bank money every month. Can you do this with crypto? Yes, but if the market goes down, you're going to be upside down in your portfolio. Can you do this with your retirement account? Yes, you can borrow against your retirement account, but you owe them 8 to 10% interest every single month, and you're going to deplete your savings. And you have to pay money on it and pay taxes when you take it out. This is tax-free. It never goes down. It's the only asset that you're going to be able to build that checks all the boxes of a sound money solution. You're going to take the cash in your policy, in your bank account, and put it into a policy, and then borrow against it from the life insurance policy company, and then invest it in an appreciating asset, take those returns and put it back into the policy. I'm going to give you a real life situation, and then I'm just going to open it up to questions and answers. This is exactly how I design every policy, what I would do with you. So let's say I'm just going to pick an easy number. Let's say you make $10,000 a month. Let's say you make $10,000 a month. Your bills are $6,000 a month, and you have $4,000 a month. And currently, 1,000 of it is going into crypto, and 3,000 of it is going into a high yield savings account at the bank. All right, and you think you're a smarty pants because you're getting 4% interest, right? And let's say in this high yield savings account, you have a $50,000 balance. All right, this is how I design every single policy. I'm going to take this $50,000 because guess what you're going to pay at the end of the year on this high yield savings account? You're going to pay 4% on 50K, which is $2,000 of interest income, and you're going to have to pay taxes on that. So you're going to have to pay 25% of that, just to make my math easy in my head as I'm working. You're going to pay $500 to Uncle Sam for your money. I don't have to pay anybody any money, so I want to keep my money and put it in my pocket. Right? So I'm going to take that $50,000 and I'm going to take, you know what, if you want to go throw 25% of your disposable income into crypto, go do it. I tell everybody, if you think it's going to go up, then throw a little bit in it. I think this is too much. Right? This is 10% of your total income, and this is 25% of your disposable income. I only do 5% of risky money on my disposable, so I would only be putting $200 a month into crypto or gamble or whatever the heck, throw it on the Eagles, right? That's a better investment than crypto. And understand the game. and risk that little bit of money. But let's just say that you're still going to do that no matter what, because you've been fed this whole thing about Bitcoin, which it could go up. I'm not saying anything about me not, and it's either going to not be here anymore ever in the next 5, 10, 20 years, or it's going to become legal tender and it'll blow up. Either way, I'm going to miss the boat, and either way, I'm cool with it, because I'd rather grow my business and myself. Right? Those are sound investments, right? So this is how I decide a policy. I would do a $3,000 a month policy, and instead of putting it into a high yield savings account, you put it into a policy. I would typically do about a 50-50 policy. What does that mean? That means you're putting about $1,500, but this is going to be a little too low for this one, because you're putting. No, I'm gonna do it this way. I would take $10,000 that's going into the bank. I would take the $10,000 and move that money through the bank and put it into your life insurance policy. Every month I would borrow $6,000 out so that you can pay your expenses, and I would put all of your expenses on a 0% interest business credit card, so you get points and you buy yourself some time to make more money. And every single month, this is what I would do. In addition to taking your income and putting it into the policy, I would also take this $50,000 that you have and overfund the policy. So instead of 10K, you have $60,000 of cash value in the policy, and then you have more money to leverage. And I would figure out now, after you have $6,000, and maybe if you want to keep 3 months of money in there, I don't believe in that, but if you want to, that means you have $18,000. That would be 60 minus 18 is $42,000. I would go figure out exactly what can I go spend this money on. How can I do marketing, advertising, and branding so I can increase income? And what can I invest in? Appreciating cash flowing assets. There's only 3 appreciating cash flowing assets that I like to invest in. One is me. I am the best investment that I ever make. I will buy everything and anything that will help me grow. So I'm the easiest sale. If you call me, even if you don't even have a product and you just scam me, I don't even care. If you call me and say, Josh, I'm going to help you do this faster, easier, better, and it's going to be $297, I'll give you my credit card right now. Like, it doesn't matter. I will do anything to help me get where I want to go faster. And I'm still thinking long range, but I want to get where I want to go as fast as possible so I can grow myself, right? Then I would invest in anything that'll help me grow my business, grow my people, grow myself, right? So that's number 1. Number 2 is my business. What's 1.3 or 300 to 1.3 is 433% in a year. Bitcoin hasn't done that. Dogecoin hasn't done that. Real estate hasn't done that. My business has done that. I have done that. Nothing else out there has done that. No stock has done that. Our business has done it. I can control it. And the last thing is multi-family real estate. Why multifamily? Because you go into office buildings and they're empty. When you have COVID, people are quarantined. They can't go into work. So I don't want to buy into office buildings. You don't want to buy single family homes because if one person doesn't pay their rent, you're out of your rental income. I don't want to buy warehouses. It could be a good idea, right? There could be a good idea. I just don't want to deal with it. Right? There's a lot of in and out. There's a lot of liability with warehouses. There's a lot of risk and lower return. Right? And I don't want to do Airbnbs because I don't want people to trash my place. Right? But I know everyone is going to want to rent at some point because I don't want to mow the lawn. And nobody else, actually, let's try. I had Juan, who's on the call right now. Juan likes to mow lawns. Nobody else in my office wants to mow lawns, right? But I don't want to mow lawns. I don't want to deal with anything. When the hot water heater goes out, I just want to call somebody and have it fixed and not have to pay for it. I don't want the risk, the liability, or the headache of owning a home. Right? A home has been sold to us. It is the biggest scam. Robert Kiyosaki talks about it. Ray Dalio talks about it. Everyone that I follow talks about it. Grant Cardone talks about it. But other people are going to want to rent. And the value of a rental property, when you have multiple tenants, anything 5 or higher, which technically is commercial in real estate, is based on rental income. And every single year, without fail, I've been living in the same place right here on the water in Miami, Brickell, for the last 4 years. Every single year, my landlord, Chris, he's a great guy. He says, Josh, here's the new lease, and it's always $100 to $150 more. If it's $100 more and you own 100 units, 100 times 100 is 10,000. 10,000 with 90% occupancy is $9,000 of rental income. That's $10,000. $9,000, 90% occupancy is $9,000 a month. That's 100 times 12 is $108,000 a year. Divided by, or let's say times 70%. Let's just call it 75K. Divided by a 5% cap rate, which is times 20, 75,000 times 20 is going to be $1.5 million in just increased value of a building in a year. Times 10 years means that you increase the value $15 million in 10 years. Right? Nothing else is going to do that beside you or your business. And you got to understand this game. I didn't know anything about real estate a year ago. Literally nothing a year ago. That's a game that I want to learn. And so why do I go into all of this? I want you to be aware of how you can finance your cars and your homes and your weddings. I'm getting married in 72 hours. 72 hours from right now, we will be partying for my wedding. And 96 hours from right now, I will be on a plane going to Bora Bora for my honeymoon. Everything in our wedding was financed through my life insurance policy. Everything. All right. A little bit of my family and a little bit of my fiance's family both gave us a little bit of money. That money didn't go anywhere except to in my policy and then out of my policy to pay for stuff.